Hi. So big tech just dropped earnings report that prove that AI isn't hype anymore. It's actually printing money. The Fed made their decision in regarding rates, and Trump's tariff war is escalating again. And at the same time, AI is now sort of attacking the banks that invest in it. So stay tuned to learn how these four stories impact your portfolio. Microsoft posted nearly 70 billion in revenue, largely driven by AI and cloud, and Meta surged to 47.5 billion in revenue, to some degree also enabled by AI-driven ad tools. So AI spending is now delivering real financial returns, and along with it, capital expenditure is surging. For example, Alphabet, which also posted good earnings, is planning to spend 85 billion this year, largely on AI and data centers. And AI is now seen as a growth engine instead of a speculative bet on the stock market. The second story of today is that the Fed has made a decision. They're not going to cut rates for the time being. The decision about September hasn't been made yet, however. So rates are steady because they see inflation as rising and employment rates as holding steady as well. So while of course the rate really influences the economy, the US economy, it also influences other areas, like for example Forex, where we're now seeing heightened volatility, and at the same time US equities remain quite strong. So just as the trade deal between the US and the EU was finalized earlier, Trump has now imposed tariffs on copper effective on August 6th, and imposed new tariffs on Brazil up to 50% on some goods, threatened India with new tariffs, and also reached an agreement with South Korea, which lock in 50% tariffs on South Korean goods to the US, but 0% tariffs of US goods to South Korea. So this will, of course, put supply chains under strain and lead to swings in commodities and to expected underperformance in some local equity and forex markets. Hi, it's me from the future. So new tariffs were announced after the shooting of the video, and of course want to keep my valued viewers informed at all times. So overview for some countries. A baseline 10% tariff will apply to imports from most countries with which the US has a trade surplus. For example, many Canadian goods will now face a 35% tariff. Mexico gets a 90-day tariff extension. Imports from Taiwan are subject to a 20% tariff under the expanded tariff regime. And for example, 39% tariffs apply to Swiss goods imported to the US. And out of around 70 targeted countries, tariffs range from 10 to 50%. And countries are targeted based on goods trade imbalances and political context and political reasons. For example, Syria faces 41% tariffs and others only around 15 to 30. So we talked about how AI is amazing and pushing financials of specific companies earlier, and we all know how it can boost productivity. However, it can also have a bad side because a lot of banks and other financial institutions have faced AI cyberattacks. To be specific, 45% of financial firms faced AI-driven cyberattacks, which, for example, are AI deepfakes or LLM-assisted phishing. So cybersecurity is a central issue now for fintechs and banks and other financial institutions, and AI is now adding onto that risk. It also can, of course, move markets and positively move markets and boost productivity. However, you also have to be careful with those things. For example, recently, the AI agent of Replit deleted the production database of a user. So there's always, of course, advantages and disadvantages. And yeah, always do your own research, and this is not financial advice. And I hope I was able to keep you informed this week, and helped you draw your own conclusions. If you are an institutional investor and want help generating exceptional returns, head to autotradelab.com and let's chat. Otherwise, hit the like button, subscribe, ring the bell or hit the bell, and comment down below what you want me to cover in the next video. Thank you for watching.